Good morning. Today is Friday, October the 20th. The time right now is 6:50 in the morning, and overnight we can see that market actually reacted a little bit because we have two events. One, of course, is the ongoing tension in the Middle East that's shadowing over the markets, and the other one was the Fed chairman Jerome Powell's speech overnight, in which he commented about the likelihood of a rate hike going forward. But however, I do interpret that as even-handed comment, but the market did not believe that that is the case. They think that it is a little bit dovish that caused the dollar to come off. In the meantime, we can see that the yield, treasury yields, US treasury yield continues to trade elevated at a 16 years high. So this is actually the main driver influencing market direction for the short term. We can see that the Dow Jones Cash Index has plunged to 33,368.58 overnight, and this is the lowest this week. We can see the prices is possibly heading back down to challenge the 32,846 that we saw on last Friday. So basically we are now likelihood to challenge the week's low. So if that's the case, the level to watch out will be obviously 32,846.9, which is within the bracket of prices which I previously has mentioned, like it's likely to offer some kind of support at 32,704 to 32,984. So this being the case, there's another level of support that is actually stacked right below it at 32,295 to 32,564. So both levels can actually hold the market. So in the meantime, although the market may be a little bit soft, do watch out for some kind of support to emerge between these two layers of prices. Over in the S&P 500, we also see a downward move. The market actually traded to a low of 4,269.7 from a high of 4,393.57 just 2 days ago. So we can see that the price has actually come off over the last 48 hours and is on course to actually challenge a 4,216.45, which was last seen last Friday. So again, on the downside, the level to find support, I believe, will be somewhere around 4,166 to 4,195 levels. So do look out for some kind of support to emerge from around here. And over the Nasdaq 100, we can see that prices did come off finally from a high of 15,333 to a low of 14,749.3. And this is actually where the equality lies. It is a very, very small three-way decline here. So possibly market may be supported around current prices, or if the market do take out the 14,432.6 that we saw last Friday, then there's a good possibility the market may be heading lower to 14,216 to between 14,216 to 14,375 level. So anyway, between this level, I do expect some kind of demand to actually emerge from this sell-off. Okay, over in the Asia market, of course, Hong Kong is not open yet, but yesterday we can see that the Hong Kong market did close on a bit on the weak note, largely because the ongoing property sector is still very vulnerable. We have Country Homes. Country Homes, that is basically another major Chinese developer, is at risk of defaulting come this weekend. So this is actually hanging over the Chinese market, and obviously Hong Kong market cannot totally be sheltered. Okay, so the low last night was 17,252. Right now there's a good chance that it will actually take out the low that we saw last week on Wednesday at 17,133. So do watch out for further losses in the Hong Kong market. Now in the Nikkei 225, although we are still beginning to see prices starting to react, the low traded so far is 31,240, and nearby support is likely to come from 31,000 levels. So do watch out for some kind of support to emerge from around here. But if the market do plunge below 30,950, it is probably going to challenge the low that we saw on at the beginning part of October at 30,300. Okay, so basically downward move is still more favored than upside move. Over in the dollar itself, because like I mentioned yesterday, the Fed chairman's comment was actually interpreted being as a little bit dovish. So there was a sell-off in the dollar index to as low as 105.75, and this is actually quite minor in my opinion. Even if the market continues to go down, there is a good chance that it will hold at 105.29 to 105.50 levels. So if the market ever come to these levels, it's a good buy position. However, if the market continue to react to the upside, I do believe that over time, this 107.05 may not actually hold. It might actually be taken out considering the rising tension in the Middle East. Okay, over in the principal currency, earlier on I did mention the beneficiary of a weaker dollar is of course all the other principal currency. We see a rebound in a euro versus the dollar to as high as 106.16, and this has actually created what we call a very minor three-wave rally, which is almost at equality, which is ideally should be at 106.19. So the market missed it by just 3 pips, but by and large there are two possibilities. Okay, the market continue to come back down from where we are right now. Currently the market is trading 105.80 levels. There's a possibility we have a larger degree pullback all the way to test a 104.50 to as low as 104. On the other hand, there's also a case for higher prices in the principal currency, in particularly the euro versus the dollar. The low from 104.48 may to a high 106.40 may create a larger degree three wave targeting 107.30 to as high as 107.50. So both scenarios are currently, technically speaking, are quite possible. So do look out for further movements in the principal currency. But given the fact that the tension in the Middle East does not appear to be de-escalating, holding long dollar position over the weekend is a lot safer than holding short dollar position. So this is just my opinion, by the way. Over in sterling, we see the same kind of pattern. We can see that the price dipped to 120.90 overnight before rebounding back. Okay, so there is this possibility market may actually test a 120.37 before it goes higher. So for the time being, the market seems to be kept around 122 to 122.25 level. So upside is actually quite limited. Downside is also very limited. So if you can avoid trading the sterling, maybe that's a good idea. Okay, over in the Aussie remains also in very tight trading range. We have a low at 0.6280 and a high at 0.6390. So somewhere between this, just marginally above 100 pip range, the market is basically doing consolidation. Again, I think the money is not in currency for today. Okay, and over in the dollar versus the yen, obviously the dollar wants to go higher versus the yen because surging US Treasury yields definitely will cause capital flight away from Japan, again, and that will definitely benefit the dollar rather than the yen. But however, the fear of intervention by the Japanese authority is hanging over the market, so that actually tempered demands to push the price higher. But I think eventually 150.16 is going to be crucial. If the market does punch through, I will not be surprised. However, there's going to be a lot of buy stop accumulated above 150.16 high, and not sure whether the Japanese authority will come in to intervene. Okay, so far they have only done verbal intervention without much of a effect. Okay, the market right now is looking at dollar versus the Canadian. We can see that the market actually bounced off the 135.70 levels all the way to do a three-wave equality rally to 137.40 overnight. And this is where we are right now. There's a good chance market may pull back in a larger degree three-wave, targeting just below the 135.70. So do look out for this either possibility. Market may actually pull back before it goes up again. Okay. And over in crude oil, we can see crude oil prices continue to rally because there was a report by the EIA, which is the administration, U.S. administration, the energy agency. They actually released periodically their stockpile level, and it seems that stockpile level is actually lower than market expected. So that caused prices to actually rally to flirt with $90 per barrel. The high traded overnight is $89.54. In the futures market, currently the market is at $89.40. So this is a bracket of prices which is going to be sensitive. Whether the market can punch beyond $90.27 remains to be seen. However, if the market closed above $90.27, it will set the stage for higher prices to challenge the $95 over time. And over in precious metals, gold continue to benefit from the rising tension in the Middle East. Currently, the overnight we have a high of 1,977.70 cents, and in the spot market, and this is already where the market is likely to see some kind of immediate resistance. We are two layers of resistance here. One is bordering at 1,973 to 1,982 levels. The other one is 1,985 to 1,993. Both layers should be able to cap the rise in gold prices. In fact, it may be a good idea to take some profit off the table because there is a risk the market may come back down to test the 1,900 levels over time. So do watch out, because this rally from $1,810 has been ongoing for quite some time. So the market is technically overstretched. So it might, like I say, a good idea to take some money off the table if you are already long. Now, over in the silver is not as robust as gold on the relative basis. The high traded was not yesterday, was actually the day before. So you can see $23.32 was the high in the spot market, which actually came out to be an equality move from the low at $20.69. So we can see that the silver may be hitting some kind of pocket right now. Even if the market go a bit higher, I think we should be able to see some kind of resistance or selling interest coming in at $23.37 to $23.59. So do watch out. On the bottom side, I think the demand is still very evident at $20.58 to $22.77. So lower to buy, higher to sell, basically. Okay. And over in Bitcoin, we do get a bit of a bounce. I think the market is still assessing the impact of the last night's Fed chairman comment. But by and large, I think the market wants to go higher. You can see the prices has been doing relatively well over the last week itself. Currently, market trading at 28,700. The mysterious rise to 30,127 remains the target for the next rally. Okay, so by and large, I think there should be a little bit of bullish bias in digital assets. So this is my 2 cents worth. In the meantime, I wish you guys have a great weekend ahead, and do remember we have still a rising tension in the Middle East to contend with. So in the meantime, you take care, and I'll come back to you tomorrow, Monday with a new update. Bye-bye. Take care.